All right, welcome back everyone to the sixth video. In this series, we're building out a company. We're following this company through a series of transactions, and we're looking how to record these transactions so that we can see how the basic accounting equation works in real time. If you haven't seen the previous videos, make sure you go back to the very first video, because in that video, I show you where to get the workbook for this course, and you're gonna need this workbook in order to follow along with this course. In this video specifically, we're gonna look at how you pay down an accounts payable. If you remember back to the very last video, we looked at how you purchase inventory, especially when the vendor extends you some terms, and we got terms that were net 30. So we're 30 days past that last transaction, and we're actually going to pay down this transaction in this video. All right, let's get into this. So I'm looking on my computer. I'm on journal entry number 6 in the workbook. Make sure you have your workbook in order to follow along. Okay, let's look at what we're dealing with here. Okay, October 31st, 2020. If you remember our very last transaction, which was journal entry number 5, we purchased inventory on October 1st. Now it's 30 days past that day, and we need to make good on those terms. So let's read this. In order to maintain a good relationship with your new vendor, you ensure that you pay your inventory within the net 30 days terms. Okay, so we bought some inventory. The vendor shipped it to us on that day. We physically have this inventory, but we haven't paid for it yet. So we need to pay for that now. Let's take a look at our general ledger real quick. If you look at our general ledger, remember we booked an entry to record the purchase of that inventory, and we increased our inventory, and we also increased our accounts payable. If we go to our accounts payable tab, you can see we've recorded that purchase as a record for us, saying, hey, you know, we owe this amount still. So we're going to go ahead and pay down this balance of $25,000 to our vendor, WeBuild Incorporated. So let's go to our journal entry tab now, and let's fill this out. Our post date is 10/31/2020, and we need to pay it down. So we're going to need to use our cash account, and we can put in a memo, payment made to WeBuild Incorporated. And if you have an asset and that asset goes down, we know from previous videos that's going to be a credit. So we're going to go ahead and put in a credit of $50,000. And now we'll fill in the other line to make sure that our journal entry balances. I'm going to copy the cell above it, and I'm going to select now our accounts payable account like that. I'm going to copy and paste the same thing. And now this might be a little confusing, and it might not be super intuitive if this is your first time doing it. But if you remember originally, when we took on a liability, and when you have a liability that increases, so you know we had no liability, we bought the inventory, and now we owe $25,000. Our liability increased. Well, that increase in a liability is a credit. So now we're going to pay it down, so that $25,000 liability that we owed is going to come back down to zero. So a liability account like that, when it decreases, is going to be a debit. So we'll go ahead and, oh, I put 50,000. Just fix that right there. And now let's put in our debit to our accounts payable for $25,000. Now that's our entry. Let's follow this to the general ledger. We saw originally we had a balance outstanding of $25,000 credit balance, but if we look at the activity now, you know, in journal entry number 5, we booked the credit of $25,000. In journal entry number 6, we booked the debit of $25,000, recording the pay down of that liability. And now our outstanding balance in our accounts payable general ledger account is 0. So let's follow this through the balance sheet. Income statement, nothing yet, no expenses. We haven't booked any expenses yet to this date. And if we go to our balance sheet, our cash came down, And our accounts payable that had a balance in the previous video now is 0. And if you look at our total assets is 150,000 equals our total liabilities 150,000. So our basic accounting equation works here. And now the last piece of this is to complete our schedules. So at the very end of this video course, we'll be able to reconcile all our accounts to the general ledger and to the financial statements. So the first one is, let's go to cash. Let's record that payment. So I'm going to go ahead and put the date of this transaction, which was October 31st, 2020. And this was for a payment. We made a payment, and I'll just go ahead and grab this memo here to put in the memo here. And this was a pay down of $25,000. And if we look at the balance of this, it's $115,000, but our general ledger account is showing $91,000. So we're already out of balance, and I'm bringing this up because I realized in a previous video that I had missed filling in the transaction on this schedule. So we can go ahead and fix it now. Actually, you know what? I'm not going to fix it now. We'll fix it at the very end when we go through the reconciliation process, because that's really what the reconciliation process is to catch these mistakes and make sure that you have properly accounted for everything. So we'll just leave it here. We know about the difference. We'll fix it towards the end of this course. All right, the last step is let's go to our accounts payable account tab, and let's fill this in. Same vendor, same invoice. The date is 10/31/2020. I'll put the memo we put, and this type is a payment, and I will show it as a debit here, bringing our balance from a credit balance of 25,000 back down to a net balance. So our schedule equals our general ledger, which equals what's being shown on the balance sheet. So that's it. That's the end of the video. It was super easy. But again, this is a super necessary thing. And this is something that takes place in a company almost every day. So it's super important to at least understand it and understand the business cycle of these types of transactions. All right, that's the video. Hope you enjoyed it. Looking forward to seeing you in the next video. All right.